Welcome to this special episode of the Future Money podcast, where I'm joined by Luuk Strijers, the CEO of Deribit, where we're going to talk, of course, about the recent acquisition of Deribit from Coinbase, but also the future of crypto options and crypto derivatives. Before we kick it off, of course, our regular disclaimers: nothing that we discuss on this show is investment advice, and virtual assets may lose their value in full or in part and are subject to extreme volatility. Second, Deribit is a sponsor of my educational content and companies that I'm involved in either as an investor, shareholder, or director, as well as other sponsors of my educational content could be clients or counterparties of Deribit. Today's also a very special day with Luuk joining us here, because actually we're recording this for the first time in the Creators HQ, a new government Dubai-built center where actually to attract content creators. Luuk, welcome on the show, and thanks for being the first guest in this Creator HQ, in this bull market studio that we have today.
Thank you for having me. It indeed looks quite impressive, all the equipment around me.
For those who can watch this on YouTube, you guys could see it's all proper equipment, everything. There's green rooms. Again, Dubai has decided that they believe the future of Hollywood, the Hollywood of the future, are content creators. And I have to say, they made it extremely easy for people like us to create the content. Really, really very smart, strategic move. I'm actually surprised not more countries are doing this. But let's just jump in, Luuk. I want to talk about various topics today with you. Let's start, of course, with the acquisition of Deribit from Coinbase. Can you maybe share with me, we obviously all saw the headlines of $2.9 billion. Can you share maybe with us why did Coinbase buy Deribit?
Yeah, so the why is the easy question, and that's the product shelf. So we are the undisputed number one in options. We've been having that position since we launched in 2016 when no one cared and the market didn't exist. But over the years, many competitors started and tried getting our market share and failed. So if you want to establish a full product shelf, including options, you can do two things: either try like the others or buy, and the latter is what they did. So together with Coinbase, we have a complete product shelf, essentially, options, futures, perpetuals, and spot. Across the US as well as internationally. Deribit and a part of their options and futures offering is only available internationally, so not for the US yet. Who knows over the years, but for their client base as well as ours, it's a massive expansion of product reach, essentially.
It's interesting, actually, that I can definitely see from a business perspective when they do the buy, build, partner approach, why Deribit was a good buy from that perspective. I mean, they really become basically number one crypto options provider. Are you guys going to change the name, or it's too early yet for that conversation?
We're trying to find out as well. So I think if you, it's not completely clear yet.
Yeah.
We've built and created quite a lot of brand equity. The Deribit D and our merchandise, and we're pretty proud of it. On the other hand, they've done the same with their C.
Yeah.
So the question is whether there's like room for two of these letters, or whether it will be powered by. I don't think they've made up their mind yet. So I think the good thing is the transaction hasn't closed yet. Right? So we're two standalone companies that are, let's say, trying to get married in a way. This marriage process means a lot of conversations, technically, regulatory-wise, client-wise, KYC, AML, but also brand and marketing-wise, real estate, like offices. What are you going to do? So all of these conversations are happening now. So in the first phase, we started on the acquisition itself, due diligence, etc. Once the deal was signed, you start talking about this kind of stuff, which essentially means that a lot of it is still out in the open. It's not agreed upon yet. It's to be confirmed.
So how does, where you use the analogy of marriage, no acquisition is easy. There's always difficulties, culture, mindset, size. How do you believe you'll be able to preserve, as a CEO, the culture of Deribit? I mean, you guys were very entrepreneurial over the years, very cutting edge, as you get into the Coinbase wrapper.
I think that's the key question everyone, especially internally, wants to address. I think culture-wise, we are comparable. So we've been around for quite a while. The same for them. So we're both older exchanges with a crypto-native mindset, but with people from the traditional space as well. So we have like a mix or a hybrid model that we operate. The the way we work, the offices, the remote working, etc., is all comparable. The big difference is that we do it with 165 people, and they almost have 4,000. So when it comes to coverage and the people involved in a single topic, for us it's a handful that cover one topic, and for them it's multiple hands. And it makes sense, of course. Their regulatory reach is much bigger. The number of clients is much bigger. We operate a niche market, so we have a lot of institutions, but we have less retail. They have a lot of institutions, but also millions of retail. So, of course, the staff count needs to be different. But coverage-wise, it remains to be seen how it's going to work. I think culturally, like the way people operate, the way people work, it's comparable. So that's like a good basis. And now we still have to find out. But I think it looks promising.
Very interesting. How was your personal experience as a CEO? I mean, obviously now we're seeing the wave of crypto M&A come in. What advice would you have to other CEOs whose companies are going through an acquisition process that you've learned over the last couple of weeks and months?
It's difficult to give advice because every situation is unique. I think the first months, the due diligence phase is the hardest. So the companies they operate and we operate are in different time zones. So that's one. They are on East Coast, but the big chunk of their staff is West Coast. We are 12 hours away from West Coast. We are in Dubai, we are in Amsterdam, we're in Asia. So if you look at the time to talk about topics, whatever, it's difficult to plan, and it's always at the expense of one side of the equation. Typically us, this one. Not really true actually, but they have been very flexible. But it's difficult finding a slot that works for both sides. The other thing, so that's just operations. The other thing is the extent of a due diligence process. So if you've never gone through it, it's a lot of work. So first it starts with the bankers or the advisors creating the reports, which takes a lot of time. So that's months and months of work. It means that every number has to be verified, has to be accounted for. Why did it change in March 2020, whatever. And you need to explain and be able to demonstrate full control of everything you've done over the years and will do. So that takes a lot of time. And then it's just all of that together with operating a lean and mean company. So you can be lean and mean in your operational business, but then if you have a big add-on, which you didn't account for, all of these questions and all of these reports, that's when it becomes difficult. So people feel stressed slightly, and making that happen is the more difficult, I think. But there's an end in sight, right? So this is not like an ongoing thing. There's a clear goal, and once the goal is reached, is where we are now. It's about the future and how we're going to organize that, and that's much easier.
It's always tricky because, like you said, your team has already existing pieces of work to do, and then this comes on top. And of course, this takes priority over everything else, takes out the focus. So it's always a perpetual challenge. No pun intended on that, but like for companies on that perspective. And I can also see why it makes sense for Coinbase to acquire Deribit. Obviously, like the role you guys play in the derivatives market, in the options market in particular. It's very, very interesting acquisition on that side. Let's see how the rest of the acquisition goes, but also there's so many M&As going on right now in the crypto space. I think it'll be quite interesting to watch. I want to focus, Luuk, on what we are seeing right now on crypto options. I mean, can you give us maybe an update on your side on Deribit? What are you guys seeing in terms of crypto options right now? Let's say in terms of volumes, client type, and how did this change compared to a couple of years ago?
Sure. So if you look at the market today, look at May 2025. So last month we traded 138 billion in notional total, which is the best month for 2025, and it's just shy of November last year. So November was our best month ever. So we're really looking at very high elevated volumes, and that's I think we're doing pretty well because of our options shelf. But I think the overall derivative space is looking at comparable numbers. So overall derivatives trading is at very high levels. If you look at our options shelf, which is what makes us unique, it's about, let's say, 100 billion. So out of the 138, 140, 100 billion is options. A few years ago, during the ETH flippening and those narratives, I'm not sure whether you remember, but those moments, open interest was like approximately even between BTC and ETH and volumes as well. Now it's completely the other way around. So it's purely focused on BTC, and BTC would be, let's say, 80 billion out of the 100. So 80% would be Bitcoin options, and no longer spread across multiple underlyings. We've launched multiple products. So initially we only had these two. We expanded with linear options, as we call them, USDC based options over underlyings like BNB, XRP, Solana, and we're now looking at expanding the range. We launched gold on Paxos Gold. So we expanded the coverage, but still the focus and the entire market's focus and the price focus as well. So everyone is underperforming if you're not heavyweight or over allocated towards BTC. So that's where the focus is. If you look at who's trading, a lot of it is institutional flow. So if you look at us, we have 80% give or take of the options market, 78, 79 in May, open interest wise. The rest of the market is spread across multiple different platforms, including CME, for example, in the US. But if you look at the US retail market, they don't have access to CME. They trade IBIT options, the ETF. So they do pretty well, but not at our expense. That's a nice thing. So we've kept on growing in dollar terms as well as contract terms. So you have to look at both metrics to get a fair impression. And we've grown across both. That means that the IBIT ETF flow that has been unlocked is new flow, which is great because that powers all kinds of trading strategies. If you have access to both, you can ARB these markets. You can have different collateral, different. So we accept, for example, USDC, but we accept BTC. We accept Hashnode. We accept Lido. We accept Athena. We accept yield-bearing collateral, stablecoin collateral, as well as BTC collateral. The US markets are completely different. They accept dollars. That's it. So if you're able to play with these differences, there's all kinds of trading strategies that will be unlocked, generating additional volume, and that's what we see now.
I think the allowing not only the BTC collateral, which was obviously the origins of Deribit, but I think letting Athena and other yield-bearing assets, I mean, that was very smart. And I can see over the next couple of months and your other exchanges will need to follow what Deribit has done on that perspective. I think it remains to be very interesting. I'm always interested in, like, obviously when it comes to Bitcoin, obviously it's inverse options. There's a little nuances when it comes to trading crypto options. What is the biggest hurdle you're seeing? Let's say you mentioned a big chunk of your clients are institutional investors. Is it the fact that they don't have the BTC to use as BTC collateral? Is it that they're not comfortable with the particularities of Bitcoin options? What is the biggest hurdle you are seeing for these institutional players to come on Deribit and trade crypto options?
It's not only unique for Deribit, but there were, like a few years ago, there were like this many hurdles. One of them was custody. So they didn't trust exchanges, especially after problems that occurred. So after FTX, after hacks, etc., not your keys, not your all of that stuff. So custody was an important thing. So we added multiple custodians. So I think we have 7 by now. So we started with Copper, but we have Fireblocks off exchange custody. We have Fidelity, Komainu, Zodia, BitGo, Signum. Whatever you're comfortable with, you can choose. And for some people, that means I want a certain part of the world. I want an Asian one. I want a European one, a certain license, etc. So when you asked me the question a few years ago, it would have been custody. So we've addressed that. Then after FTX, it became about trust. So are the coins really there, etc. So that means regulatory as well as operational checks. There needs to be some verification of what the exchange claims to do, which meant we relocated to Dubai, got a VARA license for everything we do. So not only spot or not only derivative, everything. It includes custody, it includes margining, etc. We have been ISO certified. We're SOC 2 certified, Type 1, Type 2. We have CCSS, which is like private key management. We have audited financials. The 5th year is coming, I think, within a week or two. All of that stuff is a hurdle for many. So if you go to a big bank, broker, asset manager, they will ask for all of this stuff. If you don't have it, it simply ends there. You can't convince anyone. It's a need. So we've done all of that. That means we get more and more clients to onboard. We get regulated clients. We get asset managers. We get firms that focus on this kind of stuff that are onboarding now. I think it will change after Coinbase. So after Coinbase, we get a big balance sheet. So some firms also focus on those. How big is your balance sheet? How big is the ability to absorb a problem? Regulatory-wise, I think we are expanding as well. So we're filing for a MiFID license in France at the moment. We're looking at Brazil. We're looking at Asia. Together with Coinbase, we might expedite that roadmap as well. So if a big asset manager from whatever country requires a local license, it's a no-go area otherwise. You can work with primes potentially that are licensed, but these are key items. So then the last thing is, I think that's what you alluded to, was the product shelf itself. So yes, initially BTC was the big unlocker perhaps of assets, because if you have 1,000 BTC and you want to generate yield, you have to deploy those BTCs somewhere. And we're perfect for that. You can use your BTCs and sell out the money calls, for example. That's what a lot of institutions do. If you go to the CME, they don't welcome your BTCs. You simply can't deploy them. So we gain by doing so. But not everyone owns BTC. If you look at the big institutions, they don't own UTC, and they don't want to have and touch BTC because it messes up their accounting, their compliance, whatever. All of their procedures are not done yet. And yes, everyone is trying to do some sandbox model with some people here or there allocating a few $1 million. But if you look at the real size, they're not yet deploying. That means they want to use their dollars preferably, or their whatever currency they want. So let's say part of that community will be able to use stablecoin. That's why we're launching linear coins. You can use your stablecoin. That's why we have expanded the cross-collateral pool with stablecoin. So you can utilize them. But at some point, not all will be willing to do so, because it's still a stablecoin. It still requires wallets. It still requires all kinds of operational stuff that they might not be doing today. So at some point, we also might be looking at USD, which could be covered by Coinbase. So I think doors are opening there.
No, I can see down the line, even if you're an institutional investor, and forget even BTC, let's say you get comfortable with stables, the key management, the wallets, the custody, there's so many complications that often they're not dealing with it right now. That's why obviously the USD collateral can help. And how do you see, Luuk, the future of Deribit when it comes to, let's say, CME or pure dollar TradFi options? Do you believe these two roads will evolve independently? Do you think some of the clients that right now are trading CME will come into the Deribit world, or vice versa? Like, how do you see these two ecosystems evolve, which are right now pretty much, as you mentioned before, independent of each other?
So CME is massive when it comes to futures. So they are, let's say, 10 times bigger than the next guy. And we are pretty big in futures as well, because if you trade options, you need to have futures as a hedge. Typically, the dated futures are used for that. So if you, let's say, trade the June expiry, you prefer to hedge with the June future instead of the perpetual. So yes, Binance, OKX, etc. are big in perpetuals, but they're typically not used as a hedge for open options positions. You use futures. So we're pretty big, but CME is much bigger. If you look at the options side, we are. So CME has less than 1% of the main volumes is coming from CME. So option-wise is tiny, and we're like massive. We're, let's say, 70 times bigger than CME. So will that go hand in hand? I think we will keep dominating, and CME is not within reach. What I alluded to before was IBIT. I think in the US, the access or the institutions can trade it. They can also trade offshore. A lot of them have offshore offices. The retail can't, so that's why they trade IBIT options. So the IBIT ecosystem is completely different than ours. So IBIT is a security. It trades like Tesla. So everyone that has a broker's account, which is millions of people, and every one of those people that are able to trade options, which is again millions of people, can trade IBIT options as well. So the big question is, can exchanges like us access US liquidity? And that's not easily solved. So even though there's a different administration, the rules are the rules. Right? So the CFTC or the SEC are pretty clear what needs to be done. And who knows, over time, together with Coinbase, we can address it, but it's not like something that's instantly available.
No, and by the way, I think you're right. The analogy I should have used is not CME, but actually IBIT options, which is a more, and it's very interesting how these two operate independently right now. And Luuk, I've always wondered personally, when I look at the crypto options world, and I've been like you in crypto for a long time now, I'm genuinely surprised the crypto options world is not bigger. Often you look, it's maybe, 1 quarter, 2 quarters away, compared to TradFi, which the option world is very, very multiple times out of spot. Why do you think until now the crypto options world has not been bigger than what it is today?
So if you look at the aggregate of all derivatives traded, options is, let's say, 2.5%, which is indeed limited. So the rest would be futures, and the big chunk is perpetuals. I think the latter is the answer to your question.
Yeah.
So if you look at, again, let's take the US as an example, and people trading Tesla, if they want leverage exposure to Tesla, there's not much they can do except trading options. So they're pretty well versed in trading Tesla options, and that's why, let's say, half of the US options volumes is retail, because all of them trade Tesla a bit like they would trade perps. But perps are not available, or that is changing now, but overall they've never been available. So in the absence of perps, a lot of people trade options. If you look at the international space where perps are available, a lot of those people would trade perps simply for leverage exposure. If you want targeted exposure, you want to trade a certain strike, you want to trade volatility, you want to trade a spread, a call spread, a vertical, all of that stuff. That's what perps never can do. So perps never replace options. They replace options for a certain group of people. But the rest of the people they will always trade options.
Yeah, I see your point, especially if a retail investor just wants levered long-term position, the perps could be interesting. They're often very easy as well, right? You don't need much technical knowledge to trade those. Yeah. How do you see from a Deribit perspective the future of perps on your platform? You mentioned how you're expanding the suite of options, not only BTC collateralized, but obviously the whole suite of other collateral that can be used. What about perps? Like, how do you see that mix changing within the Deribit platform over the coming years?
I think if you look at our option shelf, that will expand. So we have, let's say for the linear suite, we have 4 linears now. Let's say we add 5 more. Let's say 6 for the sake of the discussion. We would have 10 options, options underlyings. Typically, if it's not BTC or ETH, you would address more sophisticated traders, retail traders. So retail trades shorter dated expiries. They trade tomorrow's expiry. They trade this Friday's expiry. And if you want to hedge those, you don't necessarily need options or futures. You want to trade the September expiry, the market makers would hedge preferably using the September future. But if you trade tomorrow, there's no future that expires tomorrow. So they would trade the perps. So if you look at where an options market, if you purely focus on options, right? What would you need? You need a liquid futures market or perps market for your shorter dated range. If you have 10 options in the line, you need 10 perps. If you, besides your option shelf, want to focus on sophisticated traders globally, you can add 10, 20 more perps. But do you want 100 perps? Not necessarily, because you would go to Binance for that.
It makes sense on that side. What are you finding is the biggest challenge as a CEO when it comes to client acquisition? You talk to many institutions you're dealing with. You talk to some of the retail target you guys have. What do you think is the biggest challenge? Is it, for example, marketing? Is it regulations? Is it just comfort with the asset class? Like, how do you see that evolving?
I think it's a mix of all, sadly. You started the podcast with all of your warnings, the regulatory, mandatory stuff. We are filing for a MiFID license in order to be able to offer our product. So wherever you're not licensed, you can't offer your product. So your hands are tied when it comes to marketing. You can't do anything. So we like to offer our products. However, we don't have like a standard product that everyone is interested in. So do we want football shirts and race cars with the Deribit logo? It would look amazing, but the added value wouldn't be high, because a lot of the people interested in those sports or whatever the activity is, are not interested in options. Options is a niche product. That's why we like to focus on sophisticated trades, and those are more difficult to find. So it's a mix of what can you do, what are you permitted to do, but if you are permitted, what is the best way to approach these people? And that's a very difficult question to answer. So we've been trying over the years many different things, but there's no clear and simple answer. It's about reputation. It's about quality. It's about statistics. People that do their homework don't just sign up anywhere with a random click if they see a logo. They Google. They check what they find. They look at the statistics. Do these people actually have the percentages they claim to have, etc. And then it's about quality. If you trade an option, let's say you trade the December option, and I'm not sure when this show is going to be aired, but let's say 6 months expiry. That means we are entering a 6-month contract. It's not only a spot trade, it's instant, right? So we trade and you're done. You can move your coins out and you can each part ways. A perpetual trade is often short duration as well. You don't trade a perpetual for 6 months. The P&L, the funding element will just kill your P&L. Yeah. So it's all of these products are short dated. An options product is a long-term engagement. We margin you today and we will margin you tomorrow and the day after and the day after. So this relationship is different. So it's about quality. Again, in order to find and do marketing, you market with the stuff you do well. You market your certifications. You market the quality you have, your book liquidity.
Yeah, it's very interesting. Actually, you mentioned the nature of the relationship people are having with exchanges. You're right. I can see that the duration has a big element again from your perspective. You're looking at, and I have to say one thing that I've, being just educating people in crypto for a decade now. I have to say, you guys have a great platform on the educational platform on Deribit. For people who want to learn about crypto options, I highly recommend, by the way. I forgot what it's called. I think it's called Deribit Academy or...
Yeah, we have multiple things, but we have...
It's very good.
It can be under the Insights brand. So,
yeah, very, very well done, by the way. Well done to your team. To finish it off, Luuk, let's say we have this podcast together in 5 years. How do you see the crypto derivatives and option world, you think, in 2030?
So if you asked me 5 years ago, I think I would have... or perhaps overstated the success. I think over a longer time, crypto will be included as a standard asset class, like any other asset class. That will definitely happen. The question is how fast this will happen. So a few years ago, everyone said all the institutions are coming in 2020 or whatever, 2021, and it didn't happen. So yes, some of them are coming, and yes, some of them will include crypto in whatever 2 years from now. You see it at the brokers, all of them are including it. But if you really look under the hood, what are they including? Can you deposit assets from externally? Often no. Is it real crypto or is it ETF, etc. So it's small steps. 5 years from now, let's say the biggest, the most difficult part would be the big asset managers, the investment banks. Will all of them be there in 5 years? I hope so. That's our game plan. So we focus on the institutions and we're doing whatever we can to prepare for their arrival, so to say. But who knows? I'm 1,000% convinced that they will come. The difficulty is the timeline.
Yeah, timeline has been tough. I've been wrong multiple times over the years as well on the timelines. Luuk, to finish it off, there's a tradition. Whoever comes on my show, the bell is with me. I want to ask you quick questions, and I need 1 or 2 word answers to these questions. You ready?
Yes.
Here we go. Let's kick it off. Luuk, you're now based in Dubai. What's your favorite thing about Dubai?
The location.
Location, really, of course, time zone wise, huh?
Time zone wise is perfect. You can travel. So my family is from Europe. You can travel to Europe easily.
Yeah.
We have a big client base in Asia. You can travel there. Calling clients, it's really convenient.
Yeah, I agree. You're originally from Holland. What's the one thing you miss the most about Holland?
I think it's the range of cheese.
Really?
So, we often have discussions about which country has the best cheese, but the Netherlands is pretty good in cheese, and we have shops everywhere.
Really? Cheese? Man, I have to say, I didn't expect that from that perspective. That's why we love these questions. What's the one thing about the crypto industry that's keeping you up at night? Generally, about the crypto industry that keeps you up at night?
That's a serious answer, I guess. It's security. It's not only physical security for the team, but also just wallets and hacks and all of that stuff. So you see these nasty stories.
Yep.
We are pretty convinced that we have like a proper
Yeah.
setup, but you never know.
Scary,
So it's very.
We saw what happened. Bybit and stuff like
Yeah.
that as well. If there's one coin you can hold for the next 10 years outside of Bitcoin, one coin that you can hold the next 10 years, which one would it be?
Difficult one. Perhaps Solana.
There you go. If there's one favorite Netflix or YouTube series that you like and you think people should watch, what is it?
I like the Peaky Blinders.
Peaky Blinders?
Yes. A little bit of aggression perhaps for your audience.
Okay. I don't know what it is, but here we go. This is a funny one. Donald Trump gives you a call and says to join his crypto advisory committee. What's the one piece of advice you give him?
I would advise him to review the international system as an infrastructure globally, and not only the US markets. I think if you can fix that, not only to trumpet any country, if you can be like a key component for equivalence, regulatory wise, etc. globally, it would solve a lot of things.
Good point. Another one. If you could go back to school today, what is the one course? I know you studied at Maastricht University. What's the one course you would take back in university you wish you had taken, knowing what you know now about the future of finance?
I would have loved to know more about coding.
Coding.
Yeah.
Yeah, good one. Tomorrow you launch a new startup. What is the one other CEO you would love to have as a co-founder in the crypto space?
I think if I were to launch something new, I would focus on AI, but not necessarily with someone that is already doing it, because that's already a proven wonder. So I don't have an answer for you in that one, but I would love to be part of AI converting into like actual speech and conversation partners, and the stuff that you're starting to see about is like personalities. The Amber team did a great job. I'm not sure whether you've seen that, but like virtual persons that actually have a personality that can talk on your behalf without being programmed like on the fly.
Yeah, there's so many amazing things going on that side. What is the one thing that excites you the most about the crypto industry?
I think the one thing that scares most
excites you, yeah.
Yeah, but it's for me it's the same thing as what scares many is the 24/7 element. I think it's amazing what you can see that at when markets are calm, what can happen in the weekend. I think the 24/7 angle creates like a different mindset for the people, the team, the operations, the way you release stuff, the way you build your platform. It's really a mind. It's a difficult game to play.
The last question to close off this episode, Luuk, the traditional question of whoever comes on my show: if you could have lunch or dinner with one person, dead or alive, lunch or dinner with one person, dead or alive, who would you have lunch or dinner with?
Napoleon.
Napoleon, really? Why is that?
Or Caesar. Or whatever, someone that conquered the globe, or part of the globe.
The good old generals and dictators. Here we go. Well, that was Luuk Strijers. Oh, man. If I'm having difficulty, I'm sure many will have as well. The CEO of Deribit. Hope, guys, this was a useful episode talking about the future of Deribit and crypto options. See you all soon for another episode of the Future of Money podcast. And if you want to get in touch with me, either for sponsorship, speaking engagements, or any other questions, you can find the contact page on my website, henriarslanian.com, HENRI, Arslanian, ARSLANIan. See you guys all soon for another episode of the Future of Money podcast.